What is going on, guys? We're back again with another video, and in today's video I'm going to be going over how to find A+ trade setups. Now there's three different elements to a A+ trade setup, and they are time, SMT divergence, and internal and external range liquidity. Those are the three main factors and your foundation to putting yourself in high probability trading conditions. Now, every single trade that I've ever placed has been backed by those three elements. And likewise, with all of the other students that I've had that have been implementing my model and my trading strategy. And if you want to learn more about that, you could actually go to the description of this video, click the link, and it'll guide you to my free Discord where I host classes and I explain these topics in depth on a daily and weekly basis. But now let's get into the video and deep dive into how to actually find these A+ trade setups. All right, guys, starting off for the most important part of finding an A+ trade setup, and that element is time. And within time, in a singular trading day, there are kill zones, and those kill zones are the times out of the day that you're looking to execute your trades. And there's three sessions in a trading day: Asia session, London, and New York. Asia session is 8 p.m. Eastern Standard Time to 11 p.m. Eastern Standard Time. London is 2 a.m. to 5 a.m. Eastern Standard Time. And then there's two parts of the New York session, which is the AM. I'm executing between 8 a.m. EST to 11:30 a.m. EST, which is also a part of the London close. And then New York PM, which is where you'll primarily be trading just indices like the S&P 500 and the NASDAQ. That is 1 p.m. EST to 3:30 p.m. Eastern Standard Time. Now, one thing to understand is that during these kill zones and in these sessions, you'll see when news events happen. So you'll see red folder news events that provide volatility injections into the marketplace. It will provide you an idea of how is price going to reach from one liquidity pool to the next. And outside of these times is when there's usually time distortion, lethargic price action, and consolidation, or seek and destroy profiles. So if you stay within these zones and only execute during these times, you will find your A+ trade setups. Now, today was the 3rd of September, and there was high impact news at 10 a.m. Eastern Standard Time during New York AM session. And I'm going to be going over a setup and a trade that was offered on the S&P 500 during this exact time with a news volatility injection that provided us speed to a draw on liquidity. So we have the NASDAQ on the left and the S&P 500 on the right. Now, like I said in the beginning, in the intro of the video, there's three very important aspects and elements to finding an A+ trade setup. And what I said was time, SMT divergence, and internal and external range liquidity. So I want you to pause the video like I do in all of my previous videos. Mark up your annotations on corresponding highs and lows to see if you could find the aspects of that A+ trade setup. We have our time, and our time is the New York AM session. And now we're looking for SMT divergence, and we're looking for an internal or external range liquidity pool. So before I show my annotations, mark up yours so that you can compare on to the next slide. So if you had that marked up proper and you looked at the corresponding highs resting here, you could see that the NASDAQ makes a lower high resting here and the S&P 500 makes a higher high. That is your SMT divergence, and that is the market showing us that there's a cracking correlation between two correlated assets because the S&P 500 and the NASDAQ are supposed to be moving in tandem with each other. So now that we have our SMT divergence, we're now looking for an internal range liquidity pool or an external range. So I'm going to be marking up my annotations on the next slide. Pause the video again. See if you could find what I have marked up onto that next slide. And if you had that marked up properly, we had price create an internal range liquidity pool after we had our SMT divergence at those correlated highs right here. We had price break down lower because we had the S&P 500 labeling our SMT and the NASDAQ labeling our lower high. Then we had displacement creating an internal range liquidity pool. But what happened at that internal range liquidity pool? We created SMT divergence inside of it at the tag. We made a higher high here and a lower high on the S&P 500, failing to tag the corresponding gap compared to the NASDAQ, which it did. So I'm now noticing that there's weakness on the tag of that internal range liquidity pool on the S&P 500 on the hourly compared to the NASDAQ, which is the stronger pair. So if we're on the hourly chart, we want to be going down to the M5 chart to look for the reaction to see if we could execute a trade off of that hourly key level. So right now we have time on our side because if you look at this vertical dashed line, we are in the New York AM kill zone. And what happens inside of the New York AM kill zone? We have a tag of an internal range liquidity pool and we have SMT divergence. So did I or did I not just explain to you the three main elements to a high probability A plus trade setup? All three are checked off right now. Now, since we have all three checked off and we have basically made a narrative to how is price going to deliver to our sell side or our buy side liquidity pool draw, all we need to do is go to our execution time frame, which is our M5, off of that hourly key level reaction. So let's do that on the S&P 500 now. So since the S&P had its lower high inside of that internal range liquidity pool, we have our opening of the kill zone. Now look very closely at this. What does this look like? We have a very tight area of accumulation. And what happens at this exact candle post kill zone open? What does it do? There's a bunch of short-term highs resting here. Relative equal high, high, and then high, boom. This candle here that taps that hourly bearish fair value gap runs short-term highs and creates our hourly higher time frame SMT divergence. So after we create that SMT divergence on the hourly chart and we run short-term highs, I'm looking for this to be the manipulation before price continues lower, drawing to that sell side liquidity pool draw here. So if that's our anticipation and we're anticipating an accumulation, manipulation, distribution lower, this is the reaction after that tag. Sell, stop, run. This candle here, we need it to close below the body open to create a high probability bearish order block. And once price creates that bearish order block, all we need to do is look for price to retrace back up, tap that body low, and then go short with a stop loss placed at that SMT high at the tag of that hourly bearish fair value gap within our kill zone. Price comes back up, taps that order block, that very sensitive area in price, to the tick. That is our change in state of delivery and our high probability bearish order block for us to have a trigger to go short. And our stop loss would be at the high that created the SMT. And legitimately, immediately after we tap that order block, stop loss placed at the high, target of 1 to 2, we are out in the same 5-minute candle at a 1 to 2 risk to reward. Now, if you want to, you can do this, is you can close the position fully or you can close 80%, stop loss goes to break even, and you leave a runner to the external range target, completing that hourly market maker sell model. And if you did that, you could see that price delivers smoothly to that resting relative low, completing that hourly market maker sell model. And I had a dashed line marked off here, which was 10 a.m. high impact news. So again, time was lining up with our trade. We had SMT divergence, add an internal range liquidity pool, 3 strong foundations to a A+ trade setup with news giving us that volatility injection to deliver us to our sell side liquidity pool draw. That is the key and the foundation to high probability A plus trade setups. And this is exactly how I frame every single trade that I take. I need my base foundation, and my base foundation gives me the confidence to execute on my lower time frames or my aligned time frame for my higher time frame key level. And in this situation, it was a higher time frame hourly fair value gap to an M5 market maker sell model. So when you're looking to execute my model, I want you guys to be incorporating and using those three factors that will keep yourself in high probability trading conditions. Now, I hope you guys enjoyed this video, learned something from it, keep stacking your arsenal so that you can get funded accounts, get payouts, all that sort of stuff. You guys are doing phenomenal. I love the trades that I'm seeing, that you guys are tagging me on social media accounts. I'll give feedback to the best that I can, but I hope you guys have a great rest of your day, a great trading week, and I'll catch you next week again in the next upload.